One question on consolidation, and I'm not just talking about asset management, where we're seeing a lot of consolidation, and we're not quite sure what will happen in Europe with asset management. It seems to be just a grab for what's left. But also hedge funds and the alternative space. PE is burgeoning. On both of those themes, what are your thoughts? Let's take the asset management side first.
Look, I think consolidation is natural when you're going through the shift in market that we are going into. I think there has to be some scale. The increased costs required to be an asset manager or a hedge fund or anybody that plays in the market are going up exponentially, and a lot of that due to regulation. The barriers to entry, if you will, are higher, but it's also the cost of staying in business is very high. I think transparency and technology makes it easy for people to replicate what you're doing. I think it makes it easy for people to look at an asset manager or a hedge fund and say, yeah, that's beta. I can buy that a lot cheaper in another format. So you really have to be delivering value, and there has to be transparency around what that value is if you're going to survive.
Suni, do you think, just kind of staying with the theme, do you think illiquid assets should command a premium? Because they certainly seem to at the moment.
Yeah, liquid assets, the technical bid there is also huge. One of the interesting things, we don't have a single client that isn't looking to do more liquids and do more alternatives. How you define those is actually broadening when you get out there, and what's driving that, I think, is just that unique, uncorrelated asset class that everybody is always looking for. But they're having a hard time sourcing the product. So we have a lot of funds that have, again, a lot of subscription, a lot of people want to be there, but the funds themselves having a hard time sourcing those illiquid assets. There's also a drive maybe to be pre-IPO. If you're going to see the upside, a lot of these unicorns, if you will, the value is there before they go IPO. So how do you get in earlier on? And that's where a lot of the growth and the interest in illiquids and alternatives is coming from, I think.
If a client comes to you and says, I want to de-risk, I want to go into safe havens, what are those safe havens?
Wow, that's a great question today as the market's moved so much. So overall, we like yen because it's cheap, so that's a valuation play as well as it happens to be a safe haven as we go into it. I would have said, U.S. rates, but boy, recent history tells me I would have made a mistake there. We're fairly neutral on corporates credits. It doesn't seem like that's going to go anywhere, so if you want to park it in a little bit of a carry trade out of EM is probably possible in those spaces as well.
For how long does the US fend off the next recession, or at least correction?
I'll make an over-under on a year. I think we've got plenty of time yet.